Move along now to our next panel, the second panel of our morning. The title of the panel actually is Navigating the Cannabis Capital Markets Post-Legislation, so it's very timely. We're going to have a group of analysts, experts, capital markets professionals, and CEOs weighing in on where they think the industry will go post-legalization. Our moderator today is Rob Cook of the CSE, and I will let him take over and introduce our panelists. Rob?
Thanks very much. I'd invite the other panelists to come forward. With me today, I have Arthur Kwan, who is the founder, president of the CannaIncome Fund. He is with a firm called Aston Capital Advisors. They are investors in a private equity company that's invested in, I believe, 12 cannabis companies. We also have Robert Carbonaro, who is the CEO of Gravitas Securities and an experienced capital markets professional. The rose between two thorns would be Barbara Miller, who's a partner at Fasken's law firm. I'd like to welcome her. We were also expecting Vahan Jamian from MedMen, who can't make it with us today. So if anybody else is here from a U.S. Cannabis company, please come up and join us. I'll ask you his questions. Apparently the stock's been halted again. Probably more good news. It was halted on Friday when we were trying to have a pre-conference or pre-panel conference call, and he was unable to attend. They announced a $120 million bought deal on Friday. So without further ado, I think I should start asking some questions. I think the interesting thing about Canada right now is while we are post-legalization, and a lot of market participants seem to think that that meant the story was over, and the market fell on October 17th, and it hasn't really recovered a lot yet, but in my opinion it very well might, because we've seen a lot of volatility in this sector. But it's new days here, and we have very little experience with it. But one of the things about Canada is it's quite different from province to province. I think I might ask Barbara if she could comment on the impact of the different distribution rules across Canada, and in particular in Ontario, where we have proposed regulations just released on November the 14th. I haven't had a chance to read them yet, but I understand they prohibit the issuance of a retail operator's license to a corporation if more than 9.9% of the corporation is owned by one or more licensed producers. So we started off with a scheme where we were going to have Ontario cannabis stores like the LCBO, and now we don't. But we do have Ontario Cannabis Store as the middleman. And according to this rule, we won't have a brewer's retail model either. Barbara, would you care to comment on any of that?
Yes, thank you so much. Hi, everyone. Glad to be here. So there is, even though the legislation and the regulation at the highest level is federal, as you all know, it's provincially regulated in terms of distribution, sale, age limits, that kind of thing. And to add some complexity to that, we also have municipalities involved in terms of where these stores, and if eventually retail outlets are allowed, will be permitted to be opened. And under the new Ontario legislation, just to digress before I get into the schema, is that they are allowing municipalities to opt out of allowing any private retail operations in their municipality. They have a couple of months yet to make that decision. So there's still so much in flux, so much uncertainty. People were scrambling to buy up real estate, get ready to, or lease space, get ready to operate, and now they don't know if they'll be able to do so. So Canada has, as you know, 10 provinces, 3 territories. It's pretty much evenly split right now in terms of government-run only stores and private retail. In all cases other than Saskatchewan, even where private retail is permitted, the private retailer must buy their product from a government-run wholesale store operation. So Saskatchewan allows private retail to buy directly from the licensed producer. No one else can. So there is still, even in private retail, some aspect of monopoly, of course. Ontario, just turning to that, is very unique because, first of all, these new rules just came out. We don't know exactly what the applications are going to look like. You will not be able to apply for a private retail license until December 17th, and probably the application form will not come out until then because the government is scrambling to get everything ready. Once you've applied, you will be able to, as it stands right now, commence operations on April 1, 2019. So we're still a ways out. So for the moment in Ontario, you can only purchase online through the government store. There is a lot of confusion on the rules right now in terms of who can buy. We do know that a licensed producer with its affiliates cannot own more than 1 retail operation. Everyone else, you can own up to 75 as a maximum. In Ontario, in British Columbia, no one can own more than 8, for example. So it does, as to put the question Rob had asked, lead to some arbitrage in terms of where you're going to set up your operations, and it's also making it very, very difficult for people to kind of have a strategic cross-Canada plan. A lot of licensed producers had counted on being able to sell in Ontario, and because of this 9.9% rule that you just heard about, which needs to be clarified, but I won't be too legal here, but the regs are unclear in terms of that 9.9% being beneficial interest versus a legal any interest, whether it's equity or voting. But leaving that aside for a minute, a lot of the licensed producers are going to have to go now, if they want to sell in Ontario, and restructure their operations, because many of them own 100% or certainly a controlling interest in a lot of other companies, and therefore they would be affiliates, and it would prevent them from all having these retail operations. So you may find that some of the licensed producers and their affiliates may reduce their interest in these companies or set up new entities that can do private retail where they will only own 10% or less than 10%, in order to allow them to do that private retail operation.
So 11 of them could get together and share equally in all kinds of retail outlets.
That's true.
Right.
That's
And then
perhaps
we
a
wouldn't have a
flaw.
brewer's retail model.
Yeah.
Right?
Yes.
Okay. But this doesn't affect medical marijuana, does it? I mean, under ACNPR, the producers are selling to patients, and they're also selling through very few legal dispensaries?
So the ACNPR is being transitioned to the new Cannabis Act. But the rules will be that for medical marijuana, you will still be able to go to your doctor, they'll send the script, it will be couriered, delivered, that kind of thing. So the retail stores are intended to be for recreational, not for medical marijuana.
Right. But we saw in some of the United States that some of the patients found it easier to just go buy retail. Do you think that will happen here?
I think to some degree it will. Partly it's going to depend on insurance coverage, because for those that have employers that are good enough to cover this, you're going to have to do it through your medical process, or you won't get your insurance coverage. But I think it's funny that you're asking me that, because we got a call just on Friday from somebody saying they provide medical marijuana. A client didn't like the THC that was prescribed, and he wanted the producer to give them a script that had higher THC. Clearly, they couldn't do that. They have liability and other issues if they don't follow the doctor's script. So the patient actually is going to go and buy it retail because they want a different THC for composition.
Yeah, well, I think there's always been self-medication in this industry, right?
Yes, that's right.
Okay. Okay. Um, let's move on to some more market issues. Let's start with the private investment with Arthur. Arthur, what do you look for as in running the CannaIncome Fund when you're investing in private cannabis companies?
Sure. So CannaIncome Fund is a private equity fund focused across the entire value chain of the cannabis sector. So we look at cultivation, extraction, processing, edibles. Can you hear me now? Yeah. Sorry about that. And so navigating the private company investment world is a lot different, but it's also a lot more rewarding. It's not like you can go on CDAR and pull up a company's audited financials or their MD&A. So when we look at a private company investment, we look at generally 4 buckets. So the first one is the management team. That's probably the most important. Can they execute on the business plan? What are their track records before? Second bucket is the business plan, the company's assets. Where do they fit in the value chain? The third bucket is valuation. What's the pre-money valuation? Is it reasonable? We see a lot of private company deal flow. I would say on average between 5 to 10 companies a week. So we maintain a pretty good databases of companies in different subsectors. So we take a look at pre-money value and whether we think it's real or not. And the last one is the capital structure of the company. Do they have any debt, any shareholders loan? Is it clean? Are there different classes of common shares, pref shares, that sort of thing. I can't say, it's an absolute rule of thumb. We take a more holistic approach, as one should when looking at private companies. But right now, I guess that's what we look at.
Well, you sound like a value investor, but what I'm wondering is where do you see the value? What aspects of the industry?
Yeah, so that's what I like about this industry. Every day is a different day. Yesterday it was all about production capacity. What stage are you at in the application process to become an LP? Today it's more about what other sectors like that we find interesting, and specifically we've been looking more on what I would say the higher margin business. So we've been taking a closer look at a lot of extraction companies, processing companies, companies in the ancillary services, and also on the retail distribution side. We're less focused on pure cultivators at this point in time.
Yeah, a lot of the focus has been on cultivators and size, everyone bulking up, large-scale operations. On the other hand, you get a lot of people who say cultivation is a race to the bottom. Is that why you're not really in favor of it at the moment?
Yeah, no, you're absolutely right, Rob. When we take a look at that part of the world, we see the Canopies and the Auroras of the world coming out with millions of square feet of canopy space. And so when we get approached by, a cultivation company that, has already just got their license or in the process of getting their license, it's hard for us to find a sustainable competitive advantage for the little guys because, as we all know, cannabis is a commodity. It's going to be commoditized like anything else, like oil or gas. And so then you sort of have to be the lowest cost producer. Well, it's hard to be the lowest cost producer when the next guy has, for example, 3.2 million square feet of canopy space. It's hard to compete with those scale of economies.
I'll say. I hadn't heard of 3.2 million yet. That exists?
No.
They're building it?
I was just being facetious.
Okay.
Yeah.
Okay, but, okay, so what about you, Robert? Looking further down the road, we're also looking at edibles. So there you're going to get product differentiation. Is that going to have a major impact on the market in Canada?
Hi, Rob. Thank you. Well, with edibles, edibles is clearly the fastest growing segment in the cannabis industry, and it's probably the easiest entry point for the average consumer to take part in the cannabis industry. If you look at the U.S. and those states that allow the sale of edibles, those sales are now accounting for 50% or greater of the sales in the industry, and a lot of people see that as a proxy or a leading indicator of where the Canadian market could go. Also with edibles, it's a matter of discreetness and social acceptability. And so, for an example, if I invited you and your family over to my home for dinner, would you rather I pour you a glass of a cannabis-infused beverage where the dosage is controlled? Or would you rather put on your coat, come outside, smoke some marijuana, and come back inside where you just smell like you came from a Grateful Dead concert? So there's that discreteness and that social acceptability, I think, that makes it a lot easier for the average Canadian or consumer to look at the cannabis industry. Also, many people are looking at more of a holistic wellness lifestyle, and granted, on the wellness side, it is more of a micro dosage that is involved, but there are companies that have wellness products, and they're looking at cannabis as an enhancement to their product line. One of the companies that I think is doing a really good job with that is a company called Gabriella's Kitchen. I think they're presenting here today. But they look at cannabis as a way to enhance their already wellness product offering. From an industry side, I think investors are looking at those industries and companies that would have a first mover advantage on a global scale when foreign jurisdictions start to come online for cannabis sales. And I think that's why you're seeing the entry of major brands like Constellation or Molson Coors that are taking notice in the cannabis industry. And whether or not other major producers, or major companies, start to participate rather than being a spectator, it will remain to be seen. Certainly, I think they're interested because I think unlike the flower component of cannabis, the edible side, there is more of a brand awareness and brand loyalty factor involved. Because from a second-tier manufacturing standpoint, the margins are much higher, and you're able to establish more of a brand presence. And I think dispensaries are going to have to understand who their consumers are and what type of products that they're looking for, whether it be the economy brands, the more mainstream, the premium, or the luxury. Again, that's going to be something that's going to be on the ground with the various dispensaries. So that, I think, is why you're going to see a lot of companies and investors are going to be taking note of those companies that are going to be now moving into more of the picks and shovels of the cannabis industry rather than just the growers.
Right. Okay. Well, obviously, edibles will be big in the future, but is Canada going to be all that great for Molson's or Constellation brands because we have all these packaging restrictions? And I think you have to get in a brown paper bag.
Well, the
something
package.
like that. And are there advertising restrictions as well? Like, I can't see ads on TV of anybody smoking it.
Well, the packaging,
sure.
the packaging is, is certainly going through, I guess, what people are calling the growing pains of the industry. I read that for every 1 gram of marijuana that's delivered, there's up to 70 grams of packaging that's involved, and obviously that's a cost for the industry. Also, for an industry that likes to fancy itself as being the green industry in a way, the delivery for every gram comes into its own specialized type of bottle. So if you order 10 grams, you're getting 10 of these little bottles, and there's the recycling factor, and So I think, that still needs to be, certainly worked out, and the government, is still fumbling around with, Bill C-45 and trying to get the legislation right as far as how they're going to, regulate that part of the industry, and including the packaging right now. So at the moment, it doesn't really, there's no clarity, and it doesn't really make sense. I think the direction and the hope is that over time, that that's going to sort its way out into something that's more efficient for the market.
Right. When Canada introduced the MMPR regulations, we were seen as being at the forefront. There were a lot of people in other countries who thought that Canada had it right, and it was going to be a model that could be imitated. But that was only for medical marijuana. When it gets into the adult use, as I like to call it, we've seen other places go ahead of us, notably, 8 different states south of the border. Have we learned enough from them, do you think? Or are we missing the opportunity to learn from their experiences?
Well, I think that, we are definitely looking at what other states in the U.S. have done. Oregon is one state that, seems to have a good handle on of that part of the industry. Colorado, California. So I think, we're definitely looking at those states that, have rolled these products and this type of line out very successfully, and seeing whether or not we can transport that into the Canadian market.
Fair enough. Barbara, do you have any insights into that?
Well, I do, and I just wanted to add one other interesting anecdote, and that is when edibles are permitted, it will be interesting to see where they will be permitted to be sold, because we know that you have to buy from the government or a retail government, authorized, licensed facility right now, but can I go into Loblaws or Shoppers and buy my, Coke that has cannabis infusion in it? So that will be interesting to see what they do there. There is no question that the Canadian government is looking down to the U.S. experience, and frankly, vice versa. And recently, in speaking to some people in the U.S., they actually gave some cautions to Canada about edibles, in fact, just because the science is not completely clear yet in terms of, and you heard some of this morning on the first panel, in terms of how long it takes to digest the enzymes, and we're a little more clear when you smoke it or put an oil on how long this takes to react, but it's a little more unclear when you're dealing with edibles. And so the Canadian government, for better or worse, feels that they want to take time to make sure, or try to, based on discussions with the US, to see if they could make it a little more clear in terms of regulation once it is introduced.
Right, fair enough.
Rob, I think, I think the Canadian government is, I think it's got really 2 primary focuses that I can see right now. The first being, eliminating, the existing and very prevalent black market in the edible industry that currently exists right now. You can go online and you can have these products that are readily available to them. And I think the legitimate industry, which, has the capability and the means to roll out a very, transparent, a very on-site type of product, is wary of the fact that some black market edible products, all it's going to really take is for one of these products to have a major health incident, and it could really do irreparable harm to the, to the edible industry here in Canada. I think that's one of the things that they're certainly cognizant of, and that's why they're taking some time to understanding what that legislation is going to be across the country. But also, it's the protection of children, and they're really focused on that as well. In certain U.S. states, they sell all kinds of various different types of edible products, and here, where the guidance is going to be the edible sales, are they can't be too flashy, and they have to have certain restrictions on what they're allowed to sell. And so I think those items are what I think is going to drive the legislation as far as the upcoming edible industry.
Okay. When it comes to investing, Arthur, have you looked at the United States in terms of looking for winners or losers, things that you can learn from, or have you in fact invested in any U.S. operations with your own fund?
We have actually. So in our fund, there's currently 12 portfolio companies. 2 are actually in the U.S. and one, for that matter, actually went public, and they're in the edible space, Plus Products. And it's funny you mentioned that because last week I was in Las Vegas and I had the opportunity to tour several dispensaries. And going back to your original comment about Canada, you know, I agree that we're in the infancy stage, and we should be looking down into certain states, into the U.S., and learn from not only their mistakes, but also what they have done well. So, you know, there was a gentleman that's supposed to be from MedMen here today. I was actually in a MedMen dispensary in Las Vegas, and I was very impressed, actually. It was open, it was bright, there's no waiting room, there's no bars in the window. On one side of the wall, they have a giant fridge full of beverages, the edibles, even the dry flower that they have on display. They have these little containers where you can open up a little tab, you can smell it. There's a magnifying glass in these containers, so you can take a closer look if you wanted to. You know, I think not only the Canadian government, but the operators can learn a lot from the states that are currently, you know, have legalized recreational cannabis.
Right. You mentioned Plus Products. Now, that was a recent IPO?
That's right. They're an edibles company based in California. According to BDS Analytics, they have 2 out of the top 10 brands in California.
Most of the companies in the U.S. companies that have gone public in Canada have used a reverse takeover. But we've recently seen IPOs from Plus Products and Charlotte's Web Holdings. Do you think there'll be more of that?
I do. One, shells are a rare commodity, especially on the CSE, and they're quite expensive. So I think, you know, the lawyers in the room here are inventing creative structures for U.S. cannabis companies to do a straight IPO, and I think, you know, that is certainly a trend that I've been seeing as of late.
There's only so many defunct mining shells that are available right now. So.
And when they're going for $2 million, you know.
No, much more than that, actually. Depends. $2 million cash will get you the control block. And then there's the dilution. So, yeah, I mean, historically, people did RTOs because they were cheaper and easier. I think there's a lot of evidence that IPOs are cheaper and easier. So I expect we will see more of them in the future, particularly now that we have some good precedents. Yeah, okay. At this point, I'd actually like to open up the questions to the audience. And I see we have one over here.
Hi there. Right now, the regulatory regime maintains a segregation between the prescription space and the recreational space. And I'm troubled as an investor because it's not clear to me that consumers are following along. I think it was pretty evident that when we had only medical cannabis available, that consumers were getting prescriptions and using recreationally. And I think in the new legal environment, I'm hard pressed to understand why it is that people who have therapeutic instincts will bother with the red tape bureaucracy of the medical world right now to get prescriptions. And I'm hearing a lot of talk about, I mean, we've acknowledged that Canadians self-medicate a lot, and I'm just curious how I should feel as an investor about these prospects. And I'm hearing, you know, companies talk about their plans to develop medical and therapeutic products. Do we expect these things to be sold in retail stores? And I'm just kind of curious, and when you're looking at investment opportunities, do you pay attention to companies that are investing anything in understanding what consumers want, and who knows what the consumer wants?
To answer your question, I do look at, you know, the ultimate demand. And so when I look at an investment, again, you know, I see what subsegment they are in the business plan. So if they're just a medicinal, you know, cannabis supplier, for example, what I want to see is how they're able to create value in other parts of the value chain. So for example, we have an investment in a medicinal cannabis company, but what we like about that management team is they come from the pharmaceutical business before, and they already have nutraceutical products on the shelves of, for example, Rexall or Shoppers Drug Mart. And so, it's very easy for them, if they infuse their products with CBD oil, to get that because onto the shelves of, several hundred pharmacies in a relatively short order of time because they already have those type of relationships and those distribution channels already established.
Okay. Any other questions out there? All right. Now, in case anybody's shy, you can talk to any of these people afterwards. There was a sign out there that said absolutely no soliciting, so
Yes.
I'm not going to invite anybody to list their company on the CSE.
I thought they were excluding all lawyers, too.
They really should, but obviously the cannabis sector has been very good for us. People have asked me if it's our record trading and volume and market cap is all cannabis, and no, it's not. It's only about 80%. But it's actually a minority of the companies that we've listed this year, and we still have over 100 in our queue that have made application. It's also been suggested that we should change our name to the Cannabis Securities Exchange. We're not going to do that, but we do have to move our offices because we're growing. We've outgrown our office space, and we're actually going to move to the 72nd floor of the First Canadian Place, which is the tallest office building still in Toronto. So we will
You're really
change our
getting high there,
slogan
huh?
from the Exchange for Entrepreneurs to you can't get any higher than the CSE.
That should be your tagline.
Yeah.
Thanks for your attention.